هناك فرص كثير جدا في المملكة العربية السعودية في قطاعات مختلفة غير القطاع النفطي. لا يزال يكون هناك في حماس ورغبة ودافع قوي جدا لتحقيق هذه الممكنات اللي نطمح أن نستفيد منها كسعوديين ولوطننا الغالي، لكي نزيل التحديات اللي تواجهنا ولكي نستغل الفرص الغير مستغلة اللي قد تكون بحجم 90% من وضعنا اليوم، ونستمر في النمو والازدهار وننافس على كل الجبهات في أنحاء العالم.
وها نحن نخطو بدأب ونسعى بتنافسية في تحقيق مستهدفات برنامج تطوير القطاع المالي، أحد برامج رؤية المملكة 2030، وفي خضم تبلور رؤية المستقبل الاقتصادية والمالية. ها نحن مرة أخرى نجتمع تحت سقف تحاوري ومعرفي واحد يضم كبار صناع القرار وكبرى مؤسسات القطاع المالي والممولين والمستفيدين، بمعية شركائنا وزارة المالية والبنك المركزي السعودي وهيئة السوق المالية، لنبرز الموقع التنافسي المتميز للقطاع المالي السعودي في منطقة الشرق الأوسط والعالم. نجتمع هذه المرة في حوار القطاع المالي الثاني، المصرفية المفتوحة والمالية الإسلامية، ومناقشة انعكاساتهما على القطاع في فترة شهد فيها القطاع المالي في المملكة العربية السعودية وفي كثير من دول العالم المتقدم والنامي تطورات ضخمة. ستتطرق حواراتنا إلى ما بعد المصرفية المفتوحة والتوجه العالمي. المالية الإسلامية. سنبحث بشغف في دور المالية الإسلامية بالمملكة في تحقيق أهداف رؤية 2030 والتطلعات الوطنية، حيث تقف المالية الإسلامية حجر زاوية كصاحبة أكبر سوق للتمويل الإسلامي عالمياً وأكبر محتضن للمالية الإسلامية على مستوى العالم من حيث إجمالي الأصول، وبها تتبوأ المملكة المرتبة الأولى عالمياً في أهم قطاعات المالية الإسلامية. سنتعمق في فرص المالية الإسلامية المستقبلية ومسيرة تميزها التي استمرت لأكثر من 35 سنة، لنقف على اتجاهات عالمية وتطبيقات متنوعة لتطبيق صيغ متنوعة في التمويل الإسلامي لتمويل قطاع المنشآت المتوسطة والصغيرة ودمجها مع سياسات التعافي الاقتصادي الوطنية والتنمية المستدامة، إلى جانب قطاع السكوك وتمويل مشاريع التنمية. أوراق علمية وخبراء متحدثون وورش نقاشات مفتوحة لبيوت الخبرة والمعرفة. نحن في القطاع المالي نؤمن باقتصاد المعرفة كرافد جوهري لمعرفة الاقتصاد، نرمي قدما في استثمار المستقبل وتبين ملامح القادم القريب وفرصه العظيمة. حوارات مؤتمر القطاع المالي الثاني.
Experts and specialists will gather today to discuss the most prominent issues in the sector, and the sector also organized along with the partners of the financial sector, the Capital Market Authority, the Saudi Central Bank. Ladies and gentlemen, welcome with me Mr. Ziad Al Yusuf, the Deputy Governor of the Deputy Governor in Development and Technology of the Saudi Central Bank. Your Excellencies, peace be upon you. I'm glad today to welcome you all in the second edition of the Dialogues of the Financial Sector, and the second edition, in which we present the most prominent issues with the participation of many experts and specialists around the world. And this edition comes to continue the previous success that we achieved in December of 2021, focusing on financial stability and ESG. The goal of those discussions is to aim towards exchanging information and to discuss the best practices to develop this sector. One of the programs of the Vision of 2030, the audience, all the entities, both in public and private sector, spent a great effort to maintain this sector, since the central bank recently had worked on a number of initiatives to achieve the strategic goals of the financial sector, to ensure that we enable the digital transformation by providing support to the private sector and providing many products on all levels of the sector. I congratulate you the approval of the cabinet and to enhance the role of the kingdom to be one of the pioneers in this regard. And this strategy aims to enable the sector to deploy all the advanced technologies, adopt new practices that better serve the needs of the market. Brothers and sisters, we are gathered here today in the second edition of the Financial Sector Dialogue, in which we will discuss Islamic finance and open banking, ensuring the pioneering role of the kingdom and the central bank with the participant in the sector to ensure an inclusive system by enabling development of advanced financial markets, since the central bank develops the financial infrastructure by providing the best practices and the best services to enhance innovation and increase competitiveness and to increase the competency of this sector. And in this regard, I'd like to point out that the central bank had recently announced to allow 3 fintechs to provide open solutions. Dear audience, what we are witnessing today in the Islamic finance that is widely spread around the world, it has achieved an increase of more than 10% to reach assets at $2.7 trillion during 2020. And in this regard, the kingdom is ranked first in this Islamic finance industry, reaching 3 trillion Saudi riyals. And the central bank relentlessly worked to develop this sector by holding conferences and workshops in close coordination with the Saudi Financial Academy. In conclusion, we are open to continue success to develop this sector concurrently with all the development that we are seeing globally to attract many investment opportunities in this sector. We truly believe that we should always maintain inclusiveness in this field, hoping that we all achieve success and benefit in our sessions. Ladies and gentlemen, welcome with me Mr. Abdullah Al-Angari, the director, Mr. Abdullah Al-Angari, Open Banking Technology and Operations Manager of the Saudi Central Bank. Peace be upon you. Welcome in this presentation about the journey of the open banking in the Kingdom of Saudi Arabia. That is considered one of the main enablers to develop the financial sector and will help us achieve the goals and objectives of this program. That is considered one of the main pillars of the Kingdom Vision 2030. At the outset, let's talk about the general concept of open banking. What is open banking? The open banking is a set of enablers and systems that encourages and incentivize the financial sectors and its clients to have access to information and back-end operations to third parties that deem trusted by them. And to simplify this concept, this process is simplified in three processes. The first step, the financial entities enable their clients to have accessibility to the information. The second step, and after the client made have accessibility to the information, the different financial entities enable the third parties to have access to this information made possible by the client. Third, and after the client or the third party rather can access the client's information, it processes such information to provide new and modern services by reviewing such information. And now, after we spoke about the open banking concept, let's move on to the transformation and the change that this concept will help us achieve. And to understand this transformation, we need to talk about the traditional banking. In traditional banking, we know that banks retains the information of the clients and limit access to such information, but only by its own channels. So the client cannot access any of their information safely and a systematic matter, but by using the financial channels of such entities such as online banking and by visiting the traditional branch in person. But in open banking, the financial entity allows their client to make their information possible to access by third parties that will enable the client to access the information by third parties that will open the doors for new usages, as you are well aware. And this graph of the different banking accounts clusters. And as we have discussed the open banking, we must also talk about the main driver that will enable this process, and this is pertaining to the applications that enables different applications to communicate amongst each other automatically and with credibility. But with open banking, this concept focuses on enabling the different financial entities, enabling the third parties to access the information and the data of such clients. And now let's talk about the open banking system and the different entities that work in this system. In this system, there are three main entities that work interactively to ensure the enablement of such services by open banking, and the fourth party that enable this process, and that is the organizing party. And this party normally is optional in some of the aspects of open banking, and we'll talk about this fourth party in details in this presentation later on. And as far as the role of the entities, the first role of the financial entities is based on enabling its clients to declare their approval of access to their information, and the role of the other entities by enabling them to access the client's information by using different applications accessed by third parties. And the role of the third parties mainly is summarized in two main processes after they access such information. The first step is providing information, ISP, information about the accounts. That means that the provider of the service will process the information of the client to provide new services such as the account clustering the or the different accounting processes of the enterprises. And the third process is to work as a service provider of payments, and in this process the process the payments on behalf of the client. And according to the open banking, the client have the right to give permission to access such information by providing new accesses and approvals to third parties, and to withdraw any previous third party approved previously. And to talk further about the open banking, we move on to the roadmap that is applied in open banking in the Kingdom of Saudi Arabia. And to better understand this journey, as you understand in this graph, the journey of the Kingdom of Saudi Arabia started in April of 2020, and as part of a strategy, it was targeting a better understanding of the open banking system and to establish the strategic framework of open banking in the Kingdom of Saudi Arabia. And after this phase ended at the end of 2020, to initiate the policy of open banking by the Saudi Central Bank that has determined the general framework for open banking and how they operate in the Kingdom of Saudi Arabia. And then we entered into the phase of designing the process of open banking, targeting to understand the general framework of how to apply open banking and to update all the information provided by all the entities in the market of Saudi Arabia based on the preliminary legislations and laws of open banking, and to initiate the active plan. And after ending the designing process, we started in the year 2022 the phase of implementation, hoping that in this year, in the third quarter, to launch the first outputs of the implementation process pertaining to the technical standards of Kingdom of Saudi Arabia, launching the first open banking services in the fourth quarter of this year. We are also aiming to launch the payment system next year. And before we talk into details about the methodology of application in Kingdom of Saudi Arabia, let's talk first about the roadmap of the open banking globally. As we see in this map, that some countries has made great advancement of applying the open banking system, and other countries didn't even start at understanding the concept and applying it. And there are other countries that made great advancement in this regard and show serious intention in this regard. And the Kingdom of Saudi Arabia today is considered one of the countries that made steady steps to ensure that legislations are put forth to help initiate open banking in the Kingdom of Saudi Arabia, following the best international practices in this regard. And we also should point out that in this graph doesn't necessarily reflect the quality of implementation in different countries in the world, and we'll talk about this aspect later on. And now we move on to the methodology of implementation of open banking. Normally, they are in different countries. They adopt different methodologies to adopt open banking, and we can summarize the adoption methods into three main methodologies. First, what is known as the methodology market-based methodology. There are no rules that allow or prevent third party to access the client's information, and the market take advantage of this point to work on effort-based activities made possible by the market, and to apply this type of the adoption of open banking normally is weak due to the fact there is no clear directives of how to best adopt open banking. And the second methodology is the facilitated methodology, as the legislative entities set a number of general frameworks and to set a number of technical standards to adopt open banking, and some other entities might be needed to be licensed and registered with the legislative body of the state, and the adoption of this methodology depends on the aptitude of the market to adopt open banking. The third model is the methodology that is based on guidance. It's also based on the fact that a legislator will set the legislative and the organization framework for the different entities, directing the financial entities and the banking sector to ensure that they have the appropriate software enabling open banking and the third entities to access information, and also demands the third parties to acquire open banking licenses. And also the legislation according to this methodology encourages the market to adopt processes and policies of open banking. And the Kingdom of Saudi Arabia is considered one of the entities that adopted this methodology in implementing open banking. As far as the implementation framework of open banking is based on three main pillars. The first pillar is the operative model, in which we determine the roles and the responsibilities needed to ensure the best and the most appropriate operation models in the Kingdom of Saudi Arabia. The second aspect pertaining to the managing of businesses and the developed market, and in this regard we focus and setting forth the main legislations and the laws that will enable the market to implement such legislations. The third aspect pertaining to technologies, in which we are want to make sure that all the legislations and the enablers are put in place to ensure the highest competencies of businesses. And now we move on to the main principles in which the open banking was based in the Kingdom of Saudi Arabia. 13 main principles distributed among 4 main sectors. The first domain is the launching methodology. It focuses on that we ensure the ideal participation of all the entities in the market, and to receive the accurate opinions as to how the open banking meet the demands of the market. And the open market, in which we determine the main principles on main 4 topics, includes the type of participants in the market, the types of products, and also all the other entities that work in this market. Third, the legislative framework of open banking, that include the licensing policies, the general governance of open banking. It includes also the business model, in addition to the enabling the information access model by the different financial entities. And fourth and finally, the standards aspect, in which we determine the technical aspects pertaining to open banking. And it was based on 3 main topics. The first topic is the standards of the application. The second topic is the general guidelines of the operation models, and third, the guidelines of the user experience of the joint operations, such as the access approval by the client to third parties. Finally, we talk about the operating and the technical model for the open banking. In the first layer, we determine the participating entities that work directly in the market with two main players: the third parties and the financial entities that allow access for clients' information, and also the the technical service provider to enable and to provide a better experience of information access. And we added the second layer of the operation model and to determine the operational processes, and includes five main pillars: the management of conflicts and dispute of transaction, the management of the report management on discrimination, the licensing management, and the operative framework for open banking. And then we determine the most prominent technologies to activate or to implement open banking, in which we determined a number of technologies. First, a system, an automated system of reports, and a registry of all the third entities that are licensed by the state, to increase credibility between the financial entities and the third parties. And also we set the technical standards to program applications of open banking, and all the services will be launched according to the timetable of the implementation of open banking in Saudi Arabia. And we should also point out that that during the past month we have been relentlessly working on the open banking laboratory concept that will enable third parties and the banks to ensure that they try the open banking application softwares and to better understand this concept. And praise to Allah, this was a success, as there was trials made by a number of financial entities and banks, and we want to assure that the platform is ready, as we are seeing many banks and other financial institutions participating in this initiative. That's all I have for you today. Thank you for listening, and peace be upon you. Ladies and gentlemen, the first session today will be held in English language. You can always make use of the interpretation devices.
First session is titled Innovation in Open Banking, moderated by Mr. Amit Malik, Accenture Global Open Banking and Open API Lead. Our speakers are Mr. Ali Al-Aini, CEO of Malaa Company, Mr. Nasser Al-Ajaji, Assistant Director General at Financial Sector Development Program, Mr. Abdullah Al-Muayyad, Founder and CEO, Tarabut Gateway, Mr. Haytham Al-Jadid, Head of New Business and Digital Ventures,
Mike was working.
Arab National Bank. Mr. Milan Vaisi, BSF Group Digital, Open Banking.
Ready? Good morning, everybody. Welcome to this panel discussion on open banking. I'm Amit Malik. I just flew in last evening from London. I lead the global open banking practice for Accenture. I have been involved in open banking from 2015 onwards, working very, very closely with regulators, industry leaders, banks, and fintechs all over the world. Let me do a quick introduction of what we are going to cover today. I have with me a very, very esteemed and very, very experienced panel. And we are going to touch upon a few things around what is open banking, what is the need for it, why is it beneficial, what does it mean for regulators and industry bodies, what does it mean for banks, what does it mean for fintechs, what does it mean for consumers, what does it mean for businesses. And of course, we are going to discuss this through three key themes. Number one, we are going to talk about innovation in open banking and why is this different. Number two, we are going to talk about what are the key use cases which we can see in the kingdom on the back of the open banking initiative which SAMA has launched. And really, we want to explore further beyond and start thinking about what happens next, what's beyond open banking. Are you all ready to start? Brilliant, thank you. I'll start with the first theme, which is innovation in open banking. My first question is for you, Nasser. How does open banking align with the Kingdom's vision of 2030 and the objectives of Fsdp? Would you want to touch upon that for a few minutes?
Thank you, Amit. Simplest answer is in complete sync, in complete alignment. Open banking is obviously an enabler for the wider financial sector. And the Financial Sector Development Program is a fundamental enabler in achieving the country's ambitious, audacious, and transformational vision. If I can put it in very simple words, we at FSDP are trying to build a future-proof financial sector, or the financial sector of the future. Now, it would be excellent to highlight, it would be great to highlight the fact that we're starting at a very high base. We have a very large, or actually one of the largest financial sectors regionally and globally as well. We are blessed with top-notch and active regulators, and last but not least, which is a very important component, we have a very active and diverse private sector that's actually pushing forward the development of the financial sector. But if I can focus maybe on two examples specifically, on how open banking and fintech in general actually assists us in developing our objectives, us as FSDP, and the wider Kingdom vision, or the Vision 2030. I'll start off with SME. Obviously, SME is a very core component and the backbone of any economy, hence the reason why the vision is actually focusing on it. And us as FSDP, we're completely focusing on the funding aspect of SMEs. And we truly believe that, and we've seen it actually in the fintech evolution that we saw in the past couple of years in the Kingdom, and we believe we're also going to see it in the upcoming months and years as well, is the fact that open banking will enable SMEs either to obtain easier access to their funding requirements, easier access to their products and services, whether banking or any of the other financial services. So this is maybe the first example. The second example would be more focused on financial inclusion and saving, which is obviously a core component and a core of the vision and FSDP, in which we aim to, one, increase the level of inclusion and increase the level of savings. And we truly mentally believe that open banking will enable the entrepreneurs, the financial institutions, banks to actually develop tailored products that caters to the demands and the needs of the consumers at the end of the day, with the ultimate benefit of increasing their savings and expanding the consumer base of the financial sector, to make sure that we include all of the relevant parties and individuals. So put simply, in complete sync, and I'll maybe leave it with those two objectives.
Thank you. Brilliant, brilliant. Quite often when we start open banking journey in a region, the banks are very, very apprehensive. The general feeling within banks is that here is another regulation, somebody is asking me to do something, it's not good for me. Mylan, what's your view? Is open banking a threat for banks? Is it asking banks to open up their crown jewels, or is it really an innovative opportunity, and why do you think so?
Thank you, Amit, for the question. And I think it has to be taken within a wider context, because in essence it is a threat and it is an opportunity. But if you go back to the origins of open banking and it coming on the back of the financial crisis, and the regulators looking at the market more broadly, primarily in Europe and the UK to start with, because that's where open banking was first initiated. The situation was challenging. You had on the back of that crisis, you had the banks having still quite a lot of control in the market, not a lot of innovation, and then major challenge for the regulators, because the regulators need to protect consumers, create new propositions for consumers to better manage their finances, and then they need to drive the economy and spur the economy and create growth, and create more competition within the market, because that's what's going to drive a healthier marketplace for the economy and for consumer protection. So in that context, when the regulators came with open banking and say, okay, banks, we're either going to break you up as big banks, or we're going to impose and mandate an open banking regulation, which means then ultimately that all of the work that you've done to create your customer base and build that up and so on, you're going to now have to open that ecosystem, your ecosystem, up to third parties. Which is, a big hurdle for a bank to get their head around, and it really impacts the overall bank strategy going forward. And that's kind of where the genesis of this is coming from. So for a bank looking at it from the beginning, it's saying, hang on, you're, as you say, going after my crown jewels, my customer base, my data. But if you look at the evolution of the banking sector globally, you see that it's very much heading towards a digital way of life and a digital business model. So then, if you kind of adopt the view strategically that you're going to have to move this direction anyway, then open banking actually becomes a very good foundation layer for moving that forward, because it's driving you to create an infrastructure, a technical infrastructure, that allows you to very easily and quickly develop new solutions and go into the market. So for a bank such as ourselves, which is very, very focused on a digital strategy and to become the go-to digital bank, it's a key element of that. So we're putting in place that ecosystem, technical ecosystem, and we'll then be leveraging that going forward. So for us, it's an evolutionary step going forward, and one that we're very much embracing. Whether it's an opportunity to innovate as a bank, or to support innovation in the market, or to create new propositions for our customers based around that ecosystem, it's all of those things. So it's very much the role of the bank to to support the fintech ecosystem, which ultimately then creates more and more innovation in the market, more opportunities in the market, and then to work with those fintechs in certain cases to bring those propositions more fully to our own particular customer base, and the other banks have their own particular customer bases as well. So it's very much an evolution in the banking sector, and it very much supports a digital strategy and becomes a foundation layer and an enablement layer there going forward.
Fantastic, and I guess that's the first key message we should take away from this conversation today, that open banking helps accelerate the ongoing digital transformation journeys which you have undertaken in a bank. What we have observed internationally is a very, very direct correlation between banks who are good in open banking are also very, very good in digital. So point worth noting that apart from everything else, it does significantly accelerate the digital transformation which banks have been undergoing, because the underlying infrastructure, the underlying technology is exactly the same. Moving on from there, Haitham, for you, clearly there are two main participants in the open banking ecosystem. There is the banks who are producing the services and APIs, and there are the fintechs and the TPPs who are consuming this. From a Saudi Arabia perspective, are you actually seeing a demand in the market? Are the fintechs coming and asking you for APIs? Or do you think that demand has yet to be generated? What's your view on the market demand in this space? Is there really need for all of this?
Thank you, Amit, for this question. I see this journey started in 3 phases. Phase 1, the banks considered themselves as a custodian of customer data. So why would they want to share the data with anyone? What's the incentive if they share the data? The second phase, fintech and new banks start, they are seeing the opportunity, and they start develop a unique product, financial product with enhanced experience to bridge the gap in the banks, for mainly to serve the untapped customers and to serve the experience overall. The third phase, this will lead us to the third phase. The banks now realize the opportunity, and they start to invest heavily in this model by encouragement with the ecosystem, with the regulator. We've seen the initiative from SAMA and collect all the banks, show them the roadmap, the strategy, and have set the deadline for the whole banks. So the banks start carved out separate entities with core propositions to come up with, or to compete, or to serve the customers in better experience. So I believe this is a high demand in Saudi Arabia and the local market.
Fantastic, fantastic, and very, very important point to reflect upon. Regulation will give you the baseline, regulation will act as the catalyst, but it's really up to the banks and the industry to start building upon the regulation and create newer propositions which may not be covered under regulation. So the way I look at open banking innovation is that regulation creates the baseline, common infrastructure, and is the catalyst for further growth. And on that note, Abdullah, from a fintech perspective, as a leading fintech, do you think open banking can truly drive differentiated innovation? And what do you think is different about this? You know, how are you seeing differentiated innovation happening in the market?
I'm pretty sure I have a biased opinion here, but first of all, thanks for having us. My take is that open banking is probably the most exciting initiative that is happening in the sector, primarily here in Saudi Arabia. In order to understand kind of the innovation, the art of what's possible, we need to see what's going on in the rest of the technology world that is leveraging available data. And I use this example a lot, but I think it's very relevant. Today, you log into your YouTube account and the first thing that pops up is the kind of videos that you like to watch. And you keep on screening and skimming and you keep on, it hooks you in. You log into your Amazon account and the first thing that pops up is the kind of books that you like to read or the kind of chocolates that you like to eat. But when we deal with our banks or financial services, it's still very much one size fits all. And when you look at the very ethos of open banking and what it enables, it is an enabling infrastructure. It allows all parties in the ecosystem to allow and innovate with customer experience at the heart of it, which means the way that you deal with your banks or your financial service providers becomes more personalized and intuitive. Now, how far that can go as far as innovation is concerned is dependent on all the various ecosystem players. I mean, open banking is a journey, there's no doubt about it, and I think that the regulator is doing an amazing job here in Saudi Arabia in terms of putting together the right frameworks to allow and enable innovation, which is where we come in, being a technology service provider that allows third parties to be able to innovate and build new customer-centric applications that sit on top of us. So whether we have Ali and the team at Malaa that are building amazing UI, UX and front-facing propositions that make it easier and elevate financial literacy, that's one part of the ecosystem, but then you also have the guys at ANB and BSF and other banks in the region that are also looking at their own specific product market or product roadmaps that focus on particular niches, whether it's wealth management or whether it's advisory and all these others. So I do think it's an enabler. I think it's a journey that is just about to begin. And I think the number of fintechs that are here in Saudi Arabia that are registered is a testament to what the ecosystem is going to evolve into, and the number of new applications and new journeys and the amazing UI UX that puts the customer at the heart of it. So yes, it's an enabling infrastructure. We're just at the beginning or at the start of the journey, and it's going to be, I think, in my opinion, the most exciting thing that has happened to fintech in the region.
Thank you, and that links fantastically well with what you said, Nasser, at the start, which was, this is about newer customer propositions, this is about customized, personalized offerings for both consumers and small and medium businesses, so thank you very much. That is what open banking is going to give us, drive newer journeys, newer propositions, and probably increase the level of competition within the financial services sector. Open banking, as Abdullah said, is a very, very interesting proposition. It's probably a regulation which is slightly different because it is one of the first regulations which I've seen which is actually driving innovation. I'm not trying to say that the other regulations are not innovative, but the entire focus of this regulation is to drive innovation. But quite often, regulation and innovation don't go hand in hand. And this is what I would like to investigate a bit more around how much of open banking needs to be regulated. Do we need to have a balance between regulation and innovation? What is the fintech view on this, Ali?
So when we talk about regulation in general, I think we need to understand why do we have them in the first place. They're quite important. They underpin fair markets. They introduce stability, establish consumer trust, and etc. And this is very integral for a use case such as open banking, where it evolves around sharing. And open banking as a use case is quite special because it involves the majority of the market participants and financial institutions. At the same time, the majority of its users are actually outside the financial sector. Let it be retail, other kind of businesses, e-commerce, and etc. So I think the best way to approach it is probably to be relative to the use case itself. So for example, if we have payment initiation, where it involves money movement, might introduce the risk of fraud or scams, which makes monitoring it very closely and establishing the well-defined use cases is a must. On the other hand, we have account information, where the majority of the use cases are, which relies very heavily on read-only operations. You're not taking any actions on behalf of the users rather than trying to provide a better experience. In this case, for traditional businesses, it might be quite overwhelming to face financial institutions' level of regulation. So taking it on a gradual approach, for example, starting with a very low barrier of entry to validate the core innovation, measure the impact, then start establishing more regulation as the operation grows, as the use case evolves, and as the fintech itself also grows in resources to be able to comply. And we're already seeing this approach being followed in the regulatory sandbox of SAMA and the FinTech Lab of the CMA, where such gradual approach is being followed for non-regulated activities, and I wish we can see the same for existing regulated activities.
Fantastic, thank you. Thank you. It is perhaps the most important and challenging question in open banking, and I know in the previous session, Abdullah talked about the various models. Probably a slightly controversial question for the panel here. Individually, as banks or policy-making bodies, regulators, or fintechs, what model do you prefer? At one extreme, we have the North American model, which is fairly market-driven, things like FDX, etc. There is no standard per se. Whereas on the other extreme, we have a UK model, which is very, very top-down, regulated, very, very prescriptive. Why do you think, and maybe we'll start with you, Nasser, why do you think the policy should be for Saudi? Is it somewhere in the middle, or do we need to still explore and let it evolve, as Ali said? Where do you think this is going?
So I think it's an excellent question. Let me start off with that. And we fundamentally believe that open banking is imminent, and it has to happen. Hence, we took more of an active approach, which usually, or historically speaking, the industry actually goes into developing the products and the services first, then the regulator jumps in and tries to ring fence it in a way to target it and protect the consumers, etc. But due to the fact that we truly believe that open banking is imminent and is transformative and is important, the regulator is in the driving seat this time. So it's flipped. In terms of how we see it, which approach do we envision the kingdom to follow, is obviously a more unified approach where the regulator sets the laws and regulations and unifies the APIs, in which that will enable eventually the banks, and it will eventually enable the fintechs to actually, it will simplify the development of the sector. So it's not going to be market driven, it's going to be regulatory driven, and that's the beauty of fintech.
Fantastic.
Maybe, Amit, if you ask the
Yes.
team, if it was market driven, would the banks open up their APIs? That's maybe another question that's worth getting an answer on.
I think it's interesting, right? Banks, I'll give you an example of another geography. So one of the first geographies which started an open banking initiative was Singapore, even before UK. So Monetary Authority of Singapore created the open banking framework back in 2016, but it was a pure framework. There were no standards, it was not mandatory. I think the challenge with a market-driven approach is that it might, if not done in the right way, it might create imbalance in the market where some of the more advanced banks will progress and do their own thing. And because it's not mandatory, some of the other banks will not do it. And we saw this imbalance getting created in Singapore. Whereas a regulatory approach, I think, is generally helps across the entire industry. And going back to your question, I think it helps the fintech industry because you see consistency in how it is implemented, as against trying to deal with different standards, each bank running their own standards and their own interpretation.
Yeah.
Brilliant.
Could I just respond to that question?
I have a response as well, but I'll wait for you before you get.
Yeah, so Abdullah is quite accurately pushing the banks to move more quickly and to make their APIs available for their production environments. But kind of tying that push into the regulatory environment and the role of SAMA, which, as you've both mentioned, a market-driven open banking environment is, in my opinion, a far weaker environment than a very clean regulatory-driven environment, because a regulatory-driven environment drives standards, which then everybody can use, and it simplifies things ongoing, and your potential growth is much higher on the back of that. There's key roles, additional roles in terms of defining standards that the regulator can drive around communication, around regulatory approval of fintechs, and so on, because you're creating a whole ecosystem, and it's a challenge to balance all of these things, of course, but certain things really need to drive and be enabled, and it's not typically in the DNA of a regulator to move very quickly and to drive a very aggressive in-market enablement. So it's always going to be a challenge from that perspective. And then as banks who are highly regulated, working with fintechs who are highly motivated to bring all of these things together is also a challenge for us, because we of course, and we have a whole myriad of other projects within our banks that we're competing for resources, we're competing for budget around, and so on. So it's balancing all of these things from our perspective as well. So I think some of the key things that we're looking forward to in working with the open banking team at SAMA is really around the communication program, and really getting that defined and more clearly roadmapped in terms of how we're going to drive that out. And then also then looking at that regulatory approval process for fintechs, because we can be ready, but at the moment there's very few fintechs in the market. In fact, there's two that are fully approved through the sandbox, which has been going on for a considerable number of months. So it's looking at how to speed that up and create that ecosystem then that has real value for everybody, because a fintech could be in a very challenging position where they're ready in the market, but their revenue base is transaction related, and if there's not a fully functioning ecosystem, then you don't have the transactions, and then you don't have the revenue, and then the fintechs are in a very difficult position. So it's the real balancing act that really has to drive that forward. And the banks obviously play a key role in that in terms of enabling the infrastructure on our side to enable the transactions in the first place.
Fantastic. Abdullah, I think you have a lot to say on this topic, so we'll be keen to hear your perspective here.
Yeah, I mean, I think there's a few things. I think it depends on the role that we want to play as an ecosystem. And I think that if you look at the world today, and if I was a fintech that was going to deploy a proposition somewhere in the world, and I had regulator-driven API standards, all APIs exposed, would I go there versus an environment that is completely fragmented and I had to integrate? I would definitely go to the first one. And I think what's happening here is we operate, so as a company today, we operate in both market-driven and regulator-driven environments today. And I can tell you without a doubt that operating in the regulator-driven environments is much more streamlined, it's faster, and it gives, people will always approach the sharing of data with apprehension in the beginning, unless they know that SAMA has taken a role and your data is safe and it's being transported in a certain way. And the banks, like Haytham was saying earlier, as the custodians of the assets or the early custodians of the data, are comfortable with these integrations and the way that they're sharing that data. Now, if we left it market-driven, it becomes a debate about who owns that data, what can we pull in, what can we pull out, and basically the methods in which these are used. So I definitely am in favor of regulating to a certain extent that it doesn't hinder, but at least setting the foundations of consent management, data sharing, the sovereignty, the handshake, the SLAs, and the frameworks in place, and then regulating certain parties that can be trusted. And I definitely think we're going to be able to see it. On the fintech side, which Mylan alluded to earlier, I think that the moment the infrastructure is ready and we go live, you will start seeing a lot of confidence in the fintech ecosystem that will flourish because they know that they have a safe environment and a very crystal clear route to production that makes it easier for them to take that dive and invest time and money into that proposition.
Fantastic, fantastic. And perhaps key message too from this session that at least the panel here prefers a regulatory-driven approach, which I also personally am in favor of. However, we need to maintain the right balance. It can't be over-regulated. Over-regulation will stifle innovation. So while regulation needs to create the common rules, the common baseline under which we will operate open banking, it is really the responsibility of the industry participants, which is the market, to drive the innovation, identify new use cases, and launch new end customer propositions. And with that, I think we can flow nicely into the second theme of today, which is exploring the open banking use cases. We have talked about innovation. We have talked about how brilliant open banking can be. Let's try to go down deeper. Let's try to understand what are those real-life use cases which are useful, not only for consumers like you and me, but also for small and medium businesses and corporates. Nasser, before we get into use case, who do you think will need to drive this innovation? Is it regulator? Is it the industry participants? Does the regulator need to prescribe some standard key use cases? What's your view on how this will all work out?
So how we look at it is ultimately we truly believe that it's collaborative driven, right? It's not the regulator in silo, the industry in silo, and then whether we want to divide the industry into banks and fintechs. So it's purely driven by a collaborative approach, and we will follow a collaborative approach when it comes to developing the open banking ecosystem. But if I was going to, and we like using this analogy at Fsdp, which is we usually compare open banking with the internet, right? Now the internet is fundamentally a platform. It is as good as the businesses that are utilizing it, and as good as the consumers that are utilizing that base. And we truly believe that the banks, the fintechs, should enable and should utilize the open banking platform and the open banking ecosystem to develop clear, targeted services and products to the end consumer, whether that consumer is an SME, whether that consumer is a corporate, or whether that consumer is a retail individual. Three major components that we believe are within that realm. And we believe that will be a fundamental backbone of developing an innovative product or an innovative solution, which is we have to make sure that the product or service is more convenient than the existing product and service. We have to make sure that it is tailored to the individual, and we also have to make sure that it is fundamentally smarter because we're utilizing the data sets and opening, again, the vaults of the data banks that we have. So yes, that's my take on the matter.
Fantastic, fantastic. So it's collaboration is the key, and partnership is what will drive differentiation. That is absolutely important, and open banking cannot work without collaboration partnerships between all parties involved. On that note, let's explore a bit further on the use cases. And Haitham, question from you. What are the open banking use cases that you believe will solve real life customer problems? What are you thinking about? What comes to the top of your mind?
This is $1 million question. I will focus on two use cases. The first one, money management. You can imagine currently the customer who has or dealing with multiple banks has multiple accounts, receive his salary in the main account and performs investment in another account, do remittance, third account, and so on. Customer has no clarity or no overview about his expenses. Now, the newcomers or the new players in the market, similar to what Mala'a did now, come up with a solution to provide 360 view, to be more insightful for the customer. Down the road will get him advice about the offers and where he should to put his money in which account depends on the, let's say, loyalty or investment product. This is the main, or this is the first use case. The other one, financial inclusion. We have segment not exploring the banking product. So the banks and the credit bureaus don't have their data. So this will encourage the banks to come up with the new model built on data-driven to underwriting to serve these customers based on to provide them new products and serve this customer based on their behavior, financial behavior. I believe these two main use cases will be the main start points for the open banking here.
Fantastic, fantastic. So we got our first two main use cases, personal finance management, which will be based around aggregating multiple open banking accounts, and then possibly financial inclusion or ability to offer better credit products to customers or consumers who are underserved today. Ali, as a leading fintech who is already building solutions like this, what's your take on these type of use cases, and what are you thinking about providing to the market on the back of this anticipated open banking standards in Saudi Arabia?
So what Smara is doing is trying to be the go-to for making financial decisions for individuals, whether it's saving or lending or investment. We try to help users to make more calculated, data-driven decisions when it comes to their daily financials. And the way that we're approaching it is by providing more of an holistic overview about their financials, trying to accommodate their financial behavior and spending to come up with better representation that allow them to get access to better financing products, get exposed to more investment solution, and also get more access to more of a personalized financial products other than what's off the shelf provided from banks. And this very specific use case, it touches financial inclusion directly, and it wouldn't be possible without open banking. The best position or the close enough position that you want to be that allows you to do such use case would be to get a banking charter, to acquire users for many years, and then start upselling these solutions. And with the help of open banking, with being, let's say, bank agnostic, allowing users to have the choice, no matter where they bank, no matter where they conduct their financials, definitely increase the level of financial inclusion and help with better financial decisions in general.
Brilliant, brilliant. I'm going to probably ask a slightly tricky question at this point to you, Ali, and this is based on what we saw in Europe. Personal finance management was supposed to be the silver bullet, was supposed to be one of the main use cases in open banking. It actually, in my opinion, didn't land very well in the market, and one of the reasons why it didn't land very well in the market is most banks and fintechs started off with a read-only view, which is interesting and exciting, but probably doesn't provide the necessary advisory or transaction capability within the personal finance management. You can almost see that I have money here and I have money elsewhere and I need to move the money, but I can't actually do it within the PFM app. And I think that was a key challenge in the phase one of the personal finance management app, which all banks in Europe have today. What's your view, Ali, on how to address that? Because read-only view, a dashboard view for customers is very interesting. I can see all of my banks in one place, but then so what? How do you bring the advisory part in? How do you bring the transaction capability in so that people can actually make decisions based on what they see in this integrated view?
Actually, when we think about personal finance management in general, it's quite the simple use case per se. Throughout our user interviews to the existing user base that we have, most of the people concerned about how much do they spend as a number, as an aggregate number, simple budgeting functionality, and etc. So the question here is not about the basic insights that your bank can provide. The question is how can you make those insights more actionable? So building personal finance management by itself alone is actually pretty hard to commercialize also. The idea is, what can you build on top of it? Is it more of an investment solution that integrates saving plans with investment plans? Is it more of a lending solution where you utilize this data to provide instant approval loans to help people with their payment plans and etc.? And this is the challenge to be broken, is how can you provide users with a value proposition on top of what they're getting from their banks? And we're pretty sure that focusing on not just the personal finance management, rather than building more of a full user journey, a small ecosystem where people can save, invest, and also manage their financial obligation, is what's going to differentiate it from a basic aggregation, basic spending management solution.
Fantastic, fantastic. And Mylan, what's your view on these use cases? As a bank, what are you thinking about building, and what do you think will be the most common use cases which you will serve?
Well, as a bank, we take a kind of a multifaceted view on use cases. And if you look globally, the primary use cases that are getting traction are around personal finance management, enterprise finance management, something to do with lending and affordability and so on, and sometimes around identity and checking and so on. So those use cases from a bank's perspective are very valuable. They can potentially help us lower our costs in certain places, but they don't drive new revenue. Some of those use cases will become standard across the market. Every bank will have included some form or the other of each of those use cases. I think from my perspective, there's two other facets to this that are kind of motivating us in a more revenue generating direction. One is around leveraging the ecosystem and the infrastructure that we've created, not only for open banking, but for banking as a service, so that we can help drive out some of our core services out to the market, but also then taking that combination and looking at our customer base, working with our specific channels or our business lines, and looking at problems that our customers have that we can solve using that infrastructure. So those edge cases that we can develop are potentially a revenue generator for the bank, which of course is key for us because we're investing a huge amount into this platform, and we need to somehow over time try to recoup a return on investment. Whether that's through cost savings or through pure new revenue. But the other really important aspect is we're starting with open banking. We're as we were talking about before, we're in the first chapter. We're in the first few paragraphs of the first chapter of the open banking journey. But very, very importantly is the next addition to the books, if you will, the trilogy, and that's open finance. And then open finance then really goes well beyond open banking in terms of the inclusion of the number of different types of businesses and services that can be included in that. And the development and evolution of new propositions out of that will be really compelling. And then even then further is the third book in the trilogy is open data, and then what that might bring down the road as well, which is a much bigger level of ecosystem than we can possibly even really imagine at the moment. You can think about it, but you can't really get your head around the whole thing. But that's the direction that we need to be thinking about as a bank and as an ecosystem, is how we evolve those use cases in that way.
If you allow me, Amit, to jump in very quickly.
Yes,
on the use cases, which are brilliant, to be honest, and they're spot on, but I believe there's a fundamental link that is missing, and that would be a very interesting discussion, which is we're looking at it from a bank's perspective, we're looking at it from a fintech's perspective and an infrastructure perspective as well, but what is the perspective of the end consumer, right? At the end of the day, all of this is happening because of the consumer, the consumer's SME, etc. So it would be very interesting to see and hear the bank's perspective and the fintech's perspective on where do they see the consumer in this full ecosystem.
Hold on to that thought, and we'll shortly come back to that. And I know we talked a lot about consumer use cases, but I personally believe that open banking is very, very attractive for small and medium businesses and corporates, SMEs and corporates. Abdullah, what's your thinking around that? What are the key use cases there, and where do you see are the key opportunities?
Yeah, so I think there's two things. Just to touch on Nasser's earlier point, I think we're just at the beginning. If I asked anyone here in the room, how much have they spent on groceries this month, for example, nobody would be able to answer it, right? How much have you spent on travel? There's an underutilization of data that is happening right now, which is not being captured. And that goes back to what we can do for SMEs in terms of leveraging data. Today, my opinion is that SMEs are the most underprivileged sector in the market right now when it comes to receiving financial products. And the reason why is nobody wants to lend them, for example. And you look at SMEs and they need to go to government subsidy programs and things like that to be able to achieve and capture lending. But from a technology standpoint, we live in a completely decentralized world today where APIs are available and we can start integrating these various points of data that, if aggregated, can give you a very cohesive picture of how this SME is doing. Integrate their ERP and accounting system to their POS, and you know what their sales are like, and you know what their collections are like, and then all of a sudden, you aggregate all of that into your own risk profiling, and you can lend them, and you can do supply chain financing, you can do bridge financing, you can do a lot of these things to help these small startups that are cash tight at that point. Now, from a technology standpoint, we're there already. This is not a question of is the technology available or not, it's a question of when the banks being the providers of credit, the question becomes how are banks lending today and what are the data points that they use to be able to consolidate and reach that risk profile. And in the modern world, we operate as marketplaces. You walk into a hypermarket today and there's 50 different producers, you walk in, you get what you want and you leave. But a bank is still very much vertically integrated when it comes to credit profiling. Send me your statements, get them stamped, I'll look at it, give me your salary certificate, and I'll decide whether I finance you or not. But if there were aggregators like ourselves that can give them an aggregation of their ERP and their POS and they run their own credit scoring, then banks would be a lot more comfortable. And it's something that I am personally passionate about because I think banks do have this social responsibility to be financing these SMEs as much as they do to these large corporates. And if you look at the banks across the region, we do have corporate lending departments, we do have treasury departments, but what about the SME lending department that should be data-driven today and should be utilizing all these new integrations, all these available data sources to bring it back and really can start financing a lot of these new and exciting ventures.
Fantastic. Going back to your point, Nasser, Malini wanted to add something there.
I just wanted to make a quick supporting point on the SMEs, really, because whether or not the banks have an obligation to do it or not, that's another question. But the support of the SME sector is critical in the kingdom, because if you look at the breakdown of the economy and so on, the enablement of the SME sector and the drive of that is critical to expand the economy and create a more equalized economy. And that's a very, very important thing to consider. And a lot of the technology that's being developed around open banking focuses on that. And if you look at the UK, I read this morning that 50% of SMEs in the UK are using an open banking solution today. And from a retailer or a consumer perspective, it's 5.5 million. So there's growth, but that's after 5 years, right? So I think we can leverage the knowledge that we can gather globally to move faster here, because we've seen what other countries have done or other regions have done, and we can move more quickly and bring that to bear.
Yeah, fantastic. And I think that leads us very well into the last question of this particular theme. We talked about the need of the customer view, the engaging with the customers, the need to move faster. We can't, UK took 5 years. I think we can do it in 2 years here. The question is, who drives customer adoption? Is it the regulator and the policymaker? Is it the bank? Is it the fintech? Is it everybody? What's your view, Nasser, on how do we get the customer engaged? How do we get the average person on the street understand about the benefits of open banking?
So it's purely driven by, obviously, a holistic communication campaign from both the regulator and the industry to send the right messages to the consumers and to basically raise awareness when it comes to open finance and the benefits of open finance. Whether we want to look at it from an SME perspective or we want to look at it from a retail perspective or a corporate perspective, I truly believe communication is key. That's the first component. Second component, which is extremely important, is building the trust in the system, making sure that the system is secure, making sure that the system actually is trustworthy to the consumer, and they fundamentally believe that they can safely transact their data from the banks to the fintechs, from the fintechs to the third-party providers, etc., and that full ecosystem.
Fantastic, fantastic. And I guess, that is something which is very key. That is a key lesson which we have seen from Europe. I would be the first person to admit that in Europe, we didn't do a particularly good job in educating the end customer or the end consumer. I remember my particular case when open banking was launched, I had to tell my bank that by law you are supposed to tell me about this because you are using my data in a certain way. But I think the key thing here is that we need to work together. It is the policymaker, the industry, and formulate out what is the right communication framework for launching open banking. So as much as I would want the banks and fintechs to be a part of it, which they will do, it is also up to the policymakers and regulators to figure out what is the right communication framework and how do we market this to the customer and consumer and drive adoption.
Could I just add to that? Because I think you're absolutely right. And from a bank's perspective, we're very willing to join that communications plan and to drive that message out to our customer base. But it has to be led very clearly from SAMA in this case, and the core communication plan needs to come. And it's not a short-term thing. It's not a 2 weeks advertising campaign and you're done. It's a sustained program that needs to be put together. And I think the sooner we start to build that, the better in terms of the development of the ecosystem.
Brilliant. Conscious of the time, let's explore beyond open banking. We talked about use cases. We talked about the relevance of how do we approach the market, how do we communicate to the customers. Let's think about the end game. What's beyond open banking? In many parts of the world, the conversation has moved on from open banking. We are hearing terms like open finance, embedded finance, etc., etc. And probably, Haitham, I'll start with you. What excites you most about the space? Where do you think all of this is going? Clearly, open banking is the start of the journey, but what do you see happening in 3 to 5 years in the kingdom?
Honestly speaking, the open banking is the beginning. And what we are doing now, we build the infrastructure, the engagement model between us as a player in the market, along with the regulator, with fintechs, to be ready for the new of open finance. Open finance will open the door for a lot of opportunities, and we will be ready inshallah for this. I believe before 3 years we will be ready inshallah. Next, the open data will drive the banking or the financial services to another way. I believe customer, you can imagine if the customer can see or perform his transactions from multiple applications, and he can buy his mortgage from a marketplace, get mortgage or auto lease from, for example, one of the Uber, for example. This is how can I see the next open banking, the next phases after open banking.
Fantastic, fantastic. In many markets, we have seen how open banking has rapidly accelerated, and while we often refer to UK and the European markets as the most advanced markets, a market of which I'm a particular fan is Brazil. Brazil is one market which has done really well in terms of adoption of open banking and the evolution of open banking, and it's probably more advanced when it comes to open finance than any of the larger open banking geographies. Abdullah, what about open finance? Should we just skip open banking and start with open finance, or is that too big a step right now for Saudi Arabia?
I think this part of the world has proven over the last 2 years what can be done here and can't be done in Europe and the US from a digitization perspective. I think primarily here in Saudi, when you look at what you can do through government programs and government applications like Abshir and Tawakkalna and everything that is out here, from an electronic signature law, digital identity, all these things that are the core components for open finance, it's inevitable. And it is going to leapfrog, I think. If you look at smartphone penetration in Saudi Arabia and across the region and how susceptible people are to technology, what's happening right now is there's a customer experience gap between how people deal with their normal applications, be it LinkedIn or Snapchat or TikTok or whatever it is they use, where they don't need to click on anything and they get what they want, and then how they deal with their banking applications or their financial services. So people are used to this intuitive customer experience. It's just not being delivered at the moment. So that's why I think the moment that applications like Mala'a and other applications in the market that are fulfilling that gap come in immediately will be taken up immediately. And on the open finance front, I think the more data sources that start opening up, it's inevitable, it's going to happen. And I think as soon as Haytham and Mylan here start thinking beyond open banking in terms of exposing their data, but now, okay, how do we do things that we can monetize? Because exposing open data is free. So how do they want to monetize? And if they want to monetize, they need to think beyond, okay, do I do address verification? Do I do salary tagging? Do I do things like that that are required by applications like Mala'a? So I wouldn't say it's 3 years away. I'd say it's 18 months away maximum before we start seeing some really exciting stuff in the open finance field here.
Interesting, interesting. And Mylan, what's your view on open finance? Clearly, open banking, from a bank side involves a lot of heavy lifting, involves a lot of work. It has cost attached to it. Controversially, what you don't want to do is add more cost to the bank by asking you to do more. What's your view? I can understand the fintech world would love open finance. Is it too much for the banks to ask right now, especially in a difficult financial climate?
No, I don't think it's too much to ask. I think as we're doing the heavy lifting now and we're having the core infrastructure in place, then it's there to leverage. And that, as I was saying before, from a use case perspective, the open finance creates a whole wealth of new opportunities to create new use cases that will support our customers and therefore be beneficial to the bank. I think as well then in terms there's a shift in the way that banks will work as well, which will through open finance will see a new adoption of financial services that banks will provide those services through partners, through third parties, whereas in the traditional model, like the customers are coming straight to us. So we'll start to grow and expand through banking as a service rather than pure core customer acquisition. So we'll use partners then as a route to market. So an open finance creates a healthier ecosystem to do that.
Fantastic, fantastic. Ali, for you, if there was one key takeaway which you would leave with the audience from this session, what would be like, what would be your main message to the audience here?
Download Mala'a. Besides downloading Mala'a, might be, I think it's pretty important to remember that the effectiveness of the open banking policy, it's by adoption and inclusion. If not the majority or everyone in the financial sector is adopting the policy, the quality and impact of the use cases will dramatically decrease and will take a pretty big hit. For example, right now we're halfway through 2022 and we only have one bank, AMB, ready for fintechs to integrate and roll out solutions with. This has caused a lot of questions about the effectiveness of personal finance, the readiness of such solutions. So it's pretty important to remember that it's more of a group effort between, or a team effort per se, between the regulators, the market participants, and the fintechs also, to make sure all of the use cases has been adopted properly, the regulations are in place, it's well communicated with the consumers, to unify the message and deliver the use cases as they're expected.
Understood. Maybe and we'll go in that sequence if you don't mind, Mylan. Abdullah, what would be your key final message to the audience here?
I think open banking is going to benefit everybody. I think every single person in this room within the next 18 months is going to benefit from open banking one way, shape, or form. Whether it's through using your existing banking applications and all of a sudden you're seeing it in a more visually acceptable and easier way, whether it's knowing more about your spending, about whether you've spent on better data enrichment that is out there, or engaging if you have an SME that you run yourself and you can collect payments seamlessly. I think open banking is with no doubt going to touch everybody's lives in a positive manner.
Haitham?
As Abdullah said, everyone will benefit out of the open banking. My key message, we will invest heavily in the engagement, increase the awareness to see the value of open banking. This is what I want to deliver.
I would also say push your banks to open up their APIs fast, if they could.
Mylan.
Yeah. What the key takeaway from this event, I think, really is we're at the beginning. It's very positive. It needs more investment. So, Ollie is going to be opening up for another round of funding, I'm sure, later this year. So, if you're a VC, you should look at really investing in the fintech community here. It has a lot of opportunity for growth and profitability. And so from a bank's perspective, we are very much looking forward to getting out in the market, opening up our APIs, and we're depending on our partners to support us in doing that. It's a very good and positive direction that the kingdom is taking, and I think that's only going to bring prosperous economy to the kingdom.
And Nasir.
Maybe I'll take a step back and look at it from why we're pushing for open banking ultimately, and that's eventually the end goal is to lower the barrier of entry into the financial system or to establish a financial institution, lower the barrier of innovation or stimulate innovation within the financial sector. Hence, we invite, as Mylan has mentioned, the entrepreneurs to actually jump in on this exciting journey. That's maybe the message to the audience, and maybe the message or the key message to the industry is ultimately please put the customer first. Think about the customer. Make sure that everything, the system is in place, the system is secure. Because if you lose the trust of the consumer, then obviously open banking would not succeed, and that's not in the mutual benefit of all parties. So please put the customer first. That's the most crucial message that we want to send.
Thank you, Nasir. We have another circa 10 to 15 minutes left, and I would really like to take the opportunity to open the Q&A to the audience and request some questions from the audience for our esteemed panel. Any takers? Anybody interested? Surely all of you have lots of questions to ask, so here is the opportunity.
Hello. Over here. Yes, my question to the distinguished panel. You touched a little base on the risk profile of the client or the consumer. Would you elaborate more on that? And how would we see the ownership of the products between the banks and the fintech? That's it.
Who wants to have a go?
I'm not sure I fully heard the question.
So it was about risk profiling the customer and creating new products for them using open banking data. And where would the product sit in terms of ownership? And where would the liability model be in such a type of product?
Yeah, I'll have a comment and then you guys can pick up. So I think in terms of who's responsible for getting the proposition to the customer, it's going to be multifaceted. It's really going to be primarily driven by the fintechs who are creating new propositions to expose those to the market and pitch those to consumers more broadly to get their buy-in. I think that underlying that, if we get the communication program in place and it's very positive, that will smooth that journey for customer adoption. I think as a bank, we'll be adopting certain different open banking type solutions and building those into our own core propositions. So you'll have another route to market of open banking solutions into our existing customer bases. So it's really two-sided. In terms of liability, it really comes down to 2 or 3 entities really in that. The liability of the validation of the TPP, so the fintech, the third-party provider, that rests with SAMA, because SAMA's processing those third parties through the regulatory sandbox. So it's that validation that allows them to operate in the ecosystem. And then if it's a bank promoting its own proposition into the market, then they hold their own liability. Was that a clear answer? I guess. Maybe too long.
It's perfect. Thank you so much for the great discussion. I had another question relating to the banks specifically. What are the key challenges you're facing to open up your bank? So in terms of open banking, I understand that there's a lot of projects going on to open up banks. I understand AMB has kind of achieved some of the fintech links. What are the challenges? Would love to shed the light on that. And if these are internal challenges, external challenges, what solutions you guys are looking for to achieve the open banking policy? Directed to Melon.
Hi, Tom.
Yes.
To me. So so my key internal head of IT is here. So I need to be very correct about how I answer that question. I think as a bank, we're highly regulated. We have an enormous amount of process overhead, and as all banks, we're going through an evolutionary of coming away from a very traditional linear approach to things to moving to an agile way of doing things. But we're all in different stages of that journey. So part of the challenges are just the regulatory overhead, and the core process that a bank needs to go through. I think from my experience over the last several months, there's 21 different key processes that I have to go through in order to get the program just to start. So there's a lot of that. It's very much internal, and then of course you have a heavy reliance on back-end integration in terms of that. So that's just where I'll leave that with our head of IT.
Haitham, what's your view? What are the key challenges which you see internally to make open banking happen? Yeah.
Alhamdulillah, we come over of all of the technical challenges. We come over of all the technical challenges, and still we face some difficulties to define the business model with the new fintechs or some fintechs. As per our experience in this field and what we did with the other players, some of the fintechs came with the innovative idea, but we are not ready at this stage to provide this kind of service. So I'm talking about open finance and another solutions.
Fantastic. I may want to reflect upon that question, and maybe there are three things which come to my mind. From a bank perspective, one, the complexity of integration with a system of record or a core system is huge, and it's expensive, and it is the biggest challenge. APIs are easy to build, but the back-end last mile integration with the system of record is the hardest, especially if you have legacy. Two probably is getting the right mindset and organization structure in place. If you don't build an organization which has an API first mindset, it will be rather difficult to move in an agile manner within this space. And third, I think we need to start really thinking about partnerships and fintechs. It's not natural for banks to think about, let's do this in partnership with a fintech. Traditionally, most large banks have been trying to do all of these innovative propositions through their own programs. It's not natural to engage with a fintech, and that fintech collaboration model has to be totally relooked at for this to really work. So I would really think about those three things as the biggest challenges which banks face today in their journey to open banking and open finance.
Maybe Amit, let me double down on all of the points, but specifically point number one. And maybe I'll go back to the discussion that we had a couple of minutes ago on should we leapfrog into open finance and open data. Our perspective is open banking is the base. We have to build the base in order to actually leapfrog into open financing and open banking, etc. So hence the integration with the banks is a crucial milestone. Building the open banking ecosystem is another crucial milestone before jumping into let's so-called more sophisticated and more integrated use cases when it comes to open finance and open data.
Fantastic. Fantastic. I think we have time for one last question, or maybe a couple of more. Yes, please.
Thank you for a very informative session. We're all acknowledging open banking is at the earliest stages of its growth in the kingdom. But with that comes immense challenges for talent. And you're all feeling that challenge in one capacity or other. What is it that you would ask from the stakeholders in the room and beyond to help you with getting that talent done, whether it's developing talent or acquiring talent? Thank you.
Yeah. I'll take a jab at it. I think I think the mindset that is, first of all, so as a company, we operate across the region in Europe as well. And we landed in Saudi Arabia more than a year ago to start exploring the landscape, to deal with Sama. And I have been personally blown away by the local talent that is running also the technology teams in the banks in Saudi Arabia. I don't think that there's a shortage of talent per se. From our perspective, being a fintech and a startup, what we've noticed is the culture within the GCC is people tend to want the stability of the banks and the institutions, whereas we try to lure them in with employee stock options and things like that. I find that in Saudi Arabia, I was just talking to Nizar from FinTech Saudi a second ago about it, that mindset of entrepreneurialism, it's still not as attractive as do you want to work in a bank's technology team, whereas in all the retail banks in Saudi Arabia that we've dealt with, we've been blown away by the local talent that is actually running that, whereas, and I'll be a little controversial here, but in the rest of the GCC where we operate, it is not the case. Here in Saudi Arabia, there is local talent, be it in data sciences or engineering or development. The challenge that we face is trying to persuade the talent to get out of their 9-to-5s in terms of institutional jobs and try to join these entrepreneurial startups. And I think the role on us is trying to make our environments more appealing, but it's also an educational kind of journey that we have to take them on. And I also think that the talent game in engineering has become completely international today. If you're a good engineer and you're a good data scientist in Saudi Arabia, you could be on your laptop working for a company in Silicon Valley. So the talent is here, in my opinion. We've found it challenging because of a cultural restriction to the GCC or the local individuals that are more inclined to accept a job from a bank or a government or an institution as opposed to joining a startup. And that's just from a fintech perspective for us.
Maybe from our perspective as well. So we took a proactive approach when it comes to talent in general, not only in open banking and fintech, but across the financial sector as a whole. And we established what is so-called the Financial Academy, in which it aims to develop the necessary skills and the talents, etc. So it's music to our ears what we heard from Abdullah, at least that the Financial Academy is on track and the talent is there. But it is an area where we are actually focusing on, and the Financial Academy is driving that, is in the driving seat on that aspect specifically.
I just want to add one thing, which is as an enabling infrastructure, we open up and we deal with fintechs in every jurisdiction that we operate in, right? So it's very important for us to engage with the fintech ecosystem. The number of Saudi fintechs that are early stage in Saudi Arabia, driven by Saudi founders and the Saudi team, is mind-blowing compared to any other GCC country in which we operate, right? They're all Saudi developers, engineers, teams that are raising venture capital, that are going out, the VCs are available. I think it's just getting people, I'm sorry to the banks, but getting people into kind of the startup mindset of it's okay to take risks.
Perhaps we go back to one of the first topics which we discussed and the correlation between digital and open banking. The core skill set required for open banking is very, very similar to what all of us have been investing within the digital transformation space. So if that exists, I would say that challenge for open banking skills and knowledge is not difficult. We are at the top of the hour. We have used up our allocated 90 minutes for this session. I'd probably like to take this opportunity to first of all thank our panelists for their insightful views and insightful thoughts. So a round of applause for them. And most importantly, I would really like to thank the audience for being patient and hearing us discuss the complex topic of open banking over the last 90 minutes. So a round of applause to the audience again. Thank you very much. I believe it's time for a group photograph.
Let's do it.
السيدات والسادة الكرام، سنتوجه الآن لاستراحة لمدة 45 دقيقة. بإمكانكم التوجه إلى قاعة الاستراحة على يمينكم. Ladies and gentlemen, we're having a 45 minutes break. Please proceed to the break area to your right. بإمكانكم أداء الصلاة في الدور الأول في الطابق الأول. سيرشدكم مضيفون للسيدات وللسادة أيضا. كما نلفت انتباهكم إلى أن هناك وجبات خفيفة ستقدم في قاعة الاستراحة على يمينكم. إذن ندعوكم للانضمام إلينا مرة أخرى بعد 45 دقيقة. شكرا لكم. See you in 45 minutes. ضيوفنا الكرام سنبدأ بعد 10 دقائق من الآن. Ladies and gentlemen, we're continuing in 10 minutes from now. السيدات والسادة الكرام، سنستكمل برنامج هذا المؤتمر بعد 10 دقائق من الآن. Ladies and gentlemen, we are continuing in 10 minutes from now. ضيوفنا الكرام، سنستكمل برنامج هذا المؤتمر بعد 5 دقائق من الآن. Ladies and gentlemen, we're continuing in 5 minutes from now. Please proceed to your seats. ضيوفنا الكرام، نأمل منكم سرعة التفضل بالجلوس على مقاعدكم. سنبدأ بعد لحظات من الآن. Ladies and gentlemen, please take your seats. We're starting shortly. ضيوفنا الكرام، نشكر لكم انتظاركم. نحن بانتظار زملائكم كي ينضموا إلينا. سنبدأ بعد دقيقتين من الآن. Ladies and gentlemen, thank you for your patience. We're awaiting your colleagues to join us. We're starting in 2 minutes from now. Thank you for understanding. السيدات والسادة الكرام، نجدد ترحيبنا بكم. نحن
Ladies and gentlemen, we shall start the third session titled Islamic Finance and the National Aspiration and the Role of the Islamic Finance in Achieving the Objectives of the Vision 2030. This session is moderated by Mr. Yusuf Khanawi, the General Secretary of the Al Baraka Conference for Islamic Economy and the General Secretary of the Islamic Chamber of Commerce. Peace be upon you. I ask my two distinguished guests, Mr. Humam Hashim and Mr. Abdullah Mugannam, to join us on the stage to start our dialogue in this session. If they may join in, please. In the name of Allah, the most gracious, the most merciful. As you are well aware, that now we have two sessions about Islamic finance. The first session, I have with me two distinguished guests to talk about two important axes of Islamic finance. Before we delve into the topics, allow me to have a simple introduction about Islamic finance and Islamic economy and the Saudi market reaching the vision of the Kingdom 2030. And I see that this introduction that will open many horizons, not only for this session, but even for the second session and maybe even what follows of future dialogues. Of course, the term Islamic finance and Islamic economy, widespread terms. The Islamic economy truly is the wider circle, if you may, or the biggest circle, if you may. And we talk about the Islamic economy. We're talking about two main components. The first component is the non-profit aspect, and the other part is that pertain to for-profit organizations. Let's talk about the non-profit branch of the Islamic economy. We're talking about waqf or endowment. We also talk about zakat, and we talk about qard hasan, and they are the main three components of all the academic studies of social economy. This is the most circulated term when we talk about when the academic articles talk about zakat, waqf, and qard hasan. And this portion in general, there are many horizons to see, limitless horizons, if you may, and some of which we haven't even started with when you talk about their impact from an economical point of view. We're not talking about Sharia aspect of it. We're talking about the economic dimension of all three aspects. The other topic that we will be speaking about in this session, the Islamic finance of all its different components, the banking Islamic finance. We also will talk about the microfinancing of the topics that haven't been widely discussed. We also have what we call the black stallion, Sukuk, became the fastest growing financial tool that is many questions and people have been thinking about it, talking about it. Sukuk, and of course many investment and diversified investment solutions, and now what is new, the fintech and fintech discusses many domains. It's not an independent domain. It's could be deemed as similar of, or could be described as a technical enabler. So this is the for-profit aspect of Islamic finance. So if you want to discuss the Saudi market specifically, we don't talk about any market. We are talking about a market that about the market in which this Islamic finance was originated in, and this is the market that is the oldest and carries the most heritage. And we talk about the different Islamic finance domains, or the banking sector, for example. The Saudi market acquires more than 25% of the Islamic assets that are compatible with Sharia. The Saudi market, as far as takaful, as I know that the market of takaful still has a long way to go to be extensively diversified. The Saudi market exceeds 40% of all the takaful market in the world. In Sukuk, we are the first issuer in the world. So we are talking about a market that is deep and big, and it's also a historical market. Even if we looked at the pioneers of the Islamic finance, we're talking about pioneers. It came from this country and spread this concept of Islamic finance throughout the world, and the such as Prince Mohammed Al Faisal, Sheikh Saleh Kamil, and who comes after them of different generation, whether be it executives or banking experts of all branches, or the Sharia experts. So the Islamic finance topic in the Saudi market is not a strange matter. Maybe a question. So what is the relationship between the Islamic economy and the vision of 2030? But just as an introduction for a specialized discussion, we had to point out between the Islamic economy and the vision. The Islamic economy is the economy of true development, is the economy of the moral and ethical continuous commitment that we see useful in times of crisis. Is the economy that puts before its eyes not only to achieve profit, but to diversify the resources and to generate employment opportunities. And therefore, when we speak about a vision of development such as the one we have here in the kingdom, we truly are talking about an intersection, a direct intersection, an organic and a structural intersection, an economy that thinks about the diversification of resources and generating employment opportunities, specifically in domains that are not related to natural resources. This is maybe the vision of the kingdom, and it intersects with the objectives of the Islamic economy that might be limited of abstaining from receiving interest rates, as it not seen as a main goal. We are glad in a decision to introduce my guest here to talk about two main axes, and within each axis we'll not have enough time to fulfill what this topic or that subject. We will talk about a dimension of guarantee or kafala, and Sukuk will be focusing on the Sukuk of companies, and start with Mr. Humam Hashim, the director of the Kafala Finance Program for SMEs, and the program and what's this relationship to the Islamic finance. Thank you, Sheikh Yusuf. As far as Kafala program, is a government program established in 1425 Hijri with the goal of Kafala program and to provide the financial guarantees that enable SMEs to receive Sharia finance from the different financial entities. The basis, the program was established with a joint capital between the Ministry of Finance and the Saudi banks at 200 million riyals, and the program started in the first year by issuing 36 or establishing, or rather 36 establishment benefited from this program in its first year. So today, the program, with the emergence of the blessed vision of the kingdom, is one of the main pillars of the vision is the enablement of SMEs. It became essential to have a program that provides support for SMEs, as we are well aware that the biggest challenge that such entities are faced with is to receive appropriate funding to continue its business. So when you provide kafala or support or financial support for that SME, you are 60% of the finance charges is provided by this governmental guarantee. Today, kafala increases capital to reach 2 billion riyals. And today, Kafala program, during the past period, since this is inception, it has reached 46 billion riyals. And today, Kafala program, and looking at the statistics provided by the Saudi Central Bank for the fourth quarter of 2021, the gross finance for SMEs had reached 203 billion riyals, and Kafala program is proud to announce that 12.5% of this program was a direct subsidy, not only for the SMEs but for other entities. And at the beginning of this study, the Saudi Central Bank started the study in 2018, and the gross finance reached 203 billion riyals. Kafala was at only 4% of the had a market share of only 4%, reaching 12.5% of the market share. Of course, Kafala program provides funding through three main partnerships. The first partnership for SMEs, as they are deemed generators of employment opportunities and main contributor to the GDP. The second partnership is with the financing entities. Kafala today has more than 42 partnership with 42 entities licensed by the Saudi Central Bank. And the third partnership, in which we worked with the governmental supporting entities to activate this constructive partnership between the government entities and Kafala program to provide support for the targeted entities of the Vision 2030. As just for example, and not exclusively, the Ministry of Tourism, we have the program Mustamir with the supply chain, also with the Ministry of Industry, a continuous program with the different Saudization program, programs of women empowering, programs of entertainment, programs for technology, and such programs. Working with Kafala program provided the appropriate funding for those entities working in those sectors. about 13 entities that has received approval. So this program is a financing program that is applicable with Sharia. The 8th article of Kafala program. Kafala program guarantees the approved finance by the Sharia entities, and this is another dimension truly of the other dimensions when we talk and the depth of the Saudi market and the innovation that we see in this market. This program is a specialist market in kafala and guarantee to the weakest segments of the society, if you may, that most of the financing entities abstain from, and this is one of the most important topics to the Islamic economy, generating employment that is stated in the program objectives. Kafala program is proud today that was capable of generating more than 750,000 employment opportunities. And so if we take into consideration the SMEs that receive funding and generated new jobs, and conservatively, if there's an addition, we're talking about a program, Kafala program, that was able to generate 1 million jobs with a specific capital and limited risks. So there is sustainable development, expertise that is being developed, and such expertise that are benefited from by more than entities, the SMEs, be it, or the government entities that want to achieve development goals in the kingdom. So allow me now to move on to the Sukuk topic, such as a black stallion. That's the analogy I used. So we want Mr. Abdullah bin Ghanam to tell us about Sukuk in the kingdom. Thank you, Sheikh Yusuf, and good evening all. There is no doubt that the kingdom is a pioneer in this field, and as you stated, Sheikh Yusuf, the information about the current status of the kingdom and the historical facts about the Islamic assets, the kingdom ranked first, and as far as the financial banking assets is compatible with Sharia. The government issued Sukuk that is compatible with Sharia also, and the kingdom is the first of the size of the managed assets that is compatible with Sharia. Of course, the Sukuk plays a major role in money market, specifically in Islamic finance, and that have seen great strides of progress during the past few years. And if I want to summarize, I will get to 5 main points as far as the size of the market. Sukuk and bonds, 760 billion riyals of the first quarter of this year. 480 is deliberated in the market. About 132 billions Sukuk issued by private sector entities, and this is a very important element to understand the full picture. And if we view the market at the end of the first quarter, it was at 8.8% of the GDP compared to the past 3 years, just going back to 2019 to see the pattern of progress. It was at 4.3% with 430 billion riyals. Now we reach 560 billion riyals. This is as far as the size of this market, of Sukuk market. The liquidity, the maturity of the market is mainly based on the exchange and the liquidity. The exchange market of Sukuk had reached 5.2 billion riyals. This size of exchange exceeds the exchange, this first quarter exceeds the size of the exchange of the whole year of 2020. The third point, the current status and the current progress that we are seeing, the development of the assets industry, investing in Sukuk. Today, the public funds that invest in Sukuk exceeded 43 billion riyals. If compared to the size, if compared to the other public funds, it was at 2 billion. So today we are talking about 15 times what we had in the previous years. The fourth point, the diversification and innovation, as you has pointed out, Sheikh Yusuf. Innovation and diversity are matters of great importance that we monitor closely. There are other indicators that reflects the size of the development. In the past, we were hoping to see that market come alive, and now we're seeing many innovation channels, such as the funds of indicator with different strategies, and the other type of innovation is the fintech. Now we have seen many active financing clusters in which we've seen the size grown to more than 550 billion riyals, and we are talking only about the SMEs, and this is one of the progress indicators. I conclude by mentioning this fifth point, an investment community. The Sukuk market has joined two global indicators, the iBooks and FTSE Russells, and this is one of the indicators that we're keenly monitoring, and we see that reflects the maturity and the attractiveness of this market.
Kingdom is one of the recent countries that joined Sukuk, and numbers speak for themselves, and these figures reflect continuous ongoing work to improve the market, the infrastructure, and the governance. So, Mr. Abdullah, you may continue briefing us about this development, whether the one you lead through the Commission or through other entities. So if you can please elaborate. Well, work is integrative and collaborative. We worked with colleagues from Ministry of Finance and the National Center for Loan Management, and colleagues at Tadawul, and also thank God, and then to programs of the vision that made alignments with directions and unified goals, and that contributed to improve the collaborative work. Well, as for programs, initiatives are a lot. I will try to summarize them into four shapes. The first one, creating the momentum in the market, and that was through the issuance of government sukuks, and that had several benefits, such as there was a curve for the return that didn't existed before, and the curve of the return is very important for efficient sukuk market, and it is a good reference for the investors. Also, that helped in attracting investors and increasing their number, and providing different products. Also, the government grants or releases improved infrastructure for the issuances and releases of companies. And that leads me to the second point of the forums. The infrastructure for Sukuk market, and that developed significantly over the past few years. One of these developments were seen in Tadawul, the way of displaying products and displaying prices, or even mentioning information about sukuks outside of this, and through providing other services such as reversive purchases and other services required from the side of investors. Also, by having attractive fees, reducing them to 50%, and reducing enlisting and registration fees in a way that attracts investors. Also, there was support for small registrations in a deposit platform, IDA, also through alignment with the international centers, and the last of them was with Euroclear last week. And this is a very important element in improving the infrastructure, so it can improve the accessibility of the market to different users across the globe. The second form of development was in the level of regulations. The authority tried to facilitate all the processes and giving organizational framework like facilities for specific purposes that enabled investors to work according to different infrastructures. I would like to conclude with the fourth form, the initiatives that has to do with awareness and training, and work is still ongoing to raise the awareness of the significance of bonds and sukuk marketing. And also there was training programs dedicated to national cadre for several aspects. And today we have many training courses provided by Financial Academy for investment in Islamic products. As you have just seen, the figures that Mr. Abdullah mentioned speak for themselves about the development and infrastructure in the market, but the future will be better than that. We will get back to that later, because I want to take this dialogue to another dimension. I want to talk about the past 2 years, the crisis that faced the entire world, and one of those most affected by that was the most vulnerable. Here I'm talking about SMEs. I think this is something to be talked about more through kafala. I want to understand how you managed the crisis effectively through kafala program for unexpected crises, because we are prone to face these crises in the future. I hope that we don't get used to crises, hopefully, in the future. Grants programs are more effective in the time crisis, and the reason for that is because it is the quickest way of obtaining government subsidies. If you have a fund, let's say 1 billion riyals, you want to distribute that to SMEs, the 1 billion is just 1 billion, and it will be given through the funds of the government to be distributed, while grants programs depend on financing companies, and when you give it this amount, there is something that may increase the figure to 10 billion riyals. So you increase the rate of support quickly, rapidly, and you may reach out to the client by the network of branches of banks, and you wouldn't you wouldn't affect the business model. Here the kingdom gave a good example by supporting SMEs in the crisis. Through the pandemic, there was more than an initiative, whether here I'm talking specifically about Kafala program through the Central Bank and National Development Fund. There were some initiatives. We had support from the Central Bank with 6 features, with reducing profit to 4%, and also not taking grants from SMEs, also canceling fees of financing, and on top of that, grants may reach 95% of the total amount of financing. So that was a great program. What Kafala achieved from March 2020, when the pandemic hit, until the first quarter, the last quarter of the year 2021, we have achieved positive results exceeding the past 13 years. Through just 2 years, the program was able, through the support that it took, to achieve better figures. Despite that, resources and the team haven't changed. However, we just created financing programs. In addition to that, National Development Fund activated 5 programs with Kafala, supporting Saudization, and there was a decree 2 weeks ago from the leadership to align with Kafala. We have also a supply chain support program. We have program dedicated to sports facilities and a program dedicated to educational program. And today we are working on programs with government entities. In addition to that, National Development Fund and financing delayed phases for installments later on, and the National Development Bank took that burden from the SMEs, and that led to stability and the regular basis of work for SMEs. Today we can see SMEs, they continued work and they haven't disrupted and brought to stop, compared to other countries that faced the pandemic due to the lockdowns and shutdowns with a large scale magnitude. So our economy today is resilient, robust, and the support of SMEs and their jobs, the support of them is objective, and we are trying to continue. I still have 4 minutes. I will distribute them on questions about future. Mr. Humam, do you see that in the future you have a role in bonds markets, Sukuk markets? So Sukuk market or bonds market is a major market in addition to Kafala. that will give a sort of trust in issued bonds, especially if they are issued to SMEs. If the assessment was rating B, it will increase to A because level of risk has decreased. Let's say rate of risk from from 90% to 80% dropped. So there is a trust from the investor, and that bond will lead to enhancement. Mr. Abdullah, the future, if the present with the modern state of the art of the market, we can see attractive figures that made us ranked first. Do we have ambition, or have we reached the limit? Try to be brief in just 1 minute. Well, we have ambition despite the positive figures. The amount of financing companies from Sukuk is 17%. If it's compared to USA, it's 45%, and in the UK, almost 30%. In South Korea is almost 30%. There are a lot of opportunities we can see to expand and grow, including expanding, issuing bonds through the market of bonds and Sukuk. Now we have seen that there are a lot of companies that are used to traditional financing through institutions of financing. Also, there is something we noticed that companies may repeat that because they believe that investors and companies should have reduction for fees. Also, there's also opportunity in areas we haven't seen them active, such as securitization and issuing mortgage-backed security, and the bonds supported with assets. The demand on these are positive. Also, expansion on areas of interest of nationally and internationally, such as financing projects of Sukuk and the green Sukuk as well. We found many companies, they joined energy industry and other industries. So we still have a lot of ambitions. As you have seen, dear guests, when we talk about Islamic finance, we talk about something specific, which is diversifying opportunities and distribution of risks, and to generate jobs and to improve markets. Here we are just talking about real economy when we talk about Islamic finance. And the market, thank God, is a huge one. We are talking about the expansion of Kafala and Sukuk of other companies because the market is demanding. So Islamic finance wasn't in the margin of the market, but in the focal core and the heart of the market. It always seeks to expand. It was enjoyable session. Time is limited. We couldn't give the floor for questions, and I hope you forgive me for that. And I would like to thank the guests, the panelists, for their valuable contributions and insights for the future. And I hope that you found pleasure and benefits from this session. Thank you so much.
Thank you. Now, we are at the third session of this conference titled Future Opportunities for the Islamic Finance Industry. This session will be moderated Mr. Abdullah Ribdi, member and the executive officer of Rossana Financing Company. Peace be upon you. And welcome you all. The third and the last session of today's conference will be titled Future Opportunities for Islamic Finance Industry. Allow me now to ask my distinguished panelist to join me, Mr. Ahmed Fandaghi, the CEO of Riyadh Center Endowment and from FinTech. I believe today that the topic of the session is of great importance, as major as the size of the country. Saudi Arabia, its geographical location is status amongst Islamic countries. So the role played today by the kingdom should be a pioneering role. The endowment in general, size in general, is immense, and the kingdom also is a thriving country with energetic youth. So the pioneering role that we should play should be greater in the opportunities and the made available in this field. We start with Mr. Ahmed Al-Fadaghi. We'll speak about awqaf or endowment. The size of this sector reached 230 billion riyals, and you might believe that the size of this market is much more bigger than the numbers show, but according to the trusted entities and according to the reporting made possible by the Saudi Central Bank. But the size of endowments in the kingdom and the location of the kingdom and the economy of the kingdom, we're talking about 230 billion riyals, that's 8% of the GDP is endowments. But it's noticed today that the mechanism of how we run the business of endowment or awqaf, we start at primitive levels, and how the awqaf or endowment are centered is mostly limited to real estate. So what are the reasons discouraging awqaf from development in the Saudi market? In the beginning, peace be upon you, I thank you, Mr. Abdullah, for the question, and I thank all the organizers for the great discussions we had in this second edition of the financial sector conference. We thank the Ministry of Finance and the Capital Market Authority, the Saudi Central Bank. Back to your question, my brother Abdullah. The challenges has originated characteristics. The waqf culture, the endowment culture, in the reflecting on the current status, maybe we should identify it. Waqf is one. It's an investment tool that aims to fulfill spatial needs and developmental needs. Also, if we take this definition, taking into consideration the historical context, we see that most people engaged in the endowment business always were trying to fulfill the local needs. That's why there was a great deal of centricity, if you may, and the mindset of the previous endowment that the waqf of the real estate endowment or the real estate waqf was the best method of investment, but the fact of limiting the type of instrument is one of the most important aspects of waqf. So the mindset itself was one of the challenges. The legislative environment and the lack of balanced and sufficient legislations was one of the major hurdles, and to redefine awqaf to ensure sustainability and fulfill the needs of the society. This balance was absent, and that did not help to deepen the understanding of awqaf. If we review some of the international practices, and this is one of the most important pillars of finance, Islamic finance. Most of the practices are related to certain economic activities. So we take out Rolex or John Hopkins and their endowments. We found it's related to different economical activities, not only limited to real estate that limit the chances of the movement of such assets to take different forms. And looking at the roadmap that is set in the program or the strategy of Islamic finance, we understand that we need governance, and that we also must take the best international practices into consideration. And the last case will be awareness and education and innovation, as to rise up and overcome many of the obstacles that we were faced with in the past. It's an inclusive system. Maybe the investment instruments were not made available for all working in the awqaf sector. The Islamic technical finance, the Islamic tech finance. So the financial technology itself is a new term. So what is the difference between the finance technology and the Islamic technology finance, driven finance? So this is the Islamic financial technology is one of the branches of the financial technology. The financial technology is the usage of a new or a modern model to have a major change of how to provide the financial service. So the work model or the technology itself is not compatible with Sharia. The cloud services are cloud services. Internet is internet. So how can you disrupt it? And the question is, whether it's compatible with Sharia or not. So we come to the issue of the Islamic financial technology. You provide the service in a manner that is compatible with Sharia, then so you did provide a solution that is part of a financial technology finance. Robo-advisory is a standing solution, and if we take that solution into consideration and to deploy it to invest in assets and stocks, this is just a simple form of how to activate the Islamic financial technology. The financial inclusiveness is another aspect. It's the Islamic financial technology is more inclusive as far as the statistics. The Islamic technology reached 49 billion riyals in 2020, and this amounts to 0.7% of the overall financial technology operations in the world. That number will rise to 128 billion riyals by 2025, with a compound growth rate going back to Awqaf, my colleague Ahmed, now we see Awqaf from the angle that people want to engage in good deeds and to devote some of their wealth to charity. So I was looking at Awqaf from a perspective of industrial development, to be part of the Islamic finance industry. Maybe that was to a great extent framed by the vision of the Kingdom 2030. We have 11 programs of the Vision 2030, and what we understand as the triangle of development, the government and its unique performance in the past periods, in addition to the private sector and the social responsibility, adding to that the non-profit sector. Truly, this triangle for a long period of time was not balanced, or the statistics shown through the media outlets that not reflect the image clearly. The efforts standing by the third sector and its finance leverage was considered the Awqaf. We'll see that the crisis were the best method to show to what extent that Awqaf had helped in this sector, and Awqaf as one of the social finance investment tools. And if we understand the conditions of Awqaf and the payments until they reach the final user, as fighting poverty or promoting education or promotion health issues, and we see that it's clear in many of the true development paths, and adding to other aspects of the infrastructure in which Awqaf is working on. The different economical activities, some of the examples such Al-Rajhi endowment in farm or poultry industry. This truly gives you a strong example of that's an aspect of economical development. The social development is also another important aspect, and our Islamic heritage shows some of these strange examples, if you may, but it shows that the endowment was very important, reaching the level of social innovation. One of the stories I can tell, or one of the stories about Awqaf, that the farm will be endowed to the benefit of the poor and the interests such as the rich does. Some of the bridal or the wedding organizing services provided to the poor just as the rich. It fulfills individual needs in addition to fulfilling also the society needs. As we mentioned, it fights poverty, working on health aspects, and also working on other fields that benefit society. You are playing a major role. Can you determine certain programs or certain paths that you advise Waqf to work in such path? I know that many of the Waqf or endowment entities don't know exactly how to grow their business and how to better serve the community. There are joint efforts known as the civil institutions board, and one of the most important questions by many Awqaf business, how can we ensure sustainability for the Waqf and fulfill true needs, and what's important in this regard, to be dynamic and to fulfill all the society needs as time differs. So the generalization of the Waqf should be keen to achieve, and also to implement innovation and to ensure that innovation is in every aspect of the operation. Maybe the dialogue will lead us to the Waqf funds that take into consideration all the risks and could be also direct to specific needs of the society without delving into certain specific conditions of the waqf itself. If you go back to Islamic financial technology, you differentiated between that and the financial technology, but we want to understand about the solutions, the models provided by the financial technology, Islamic financial technology. There are many models, but if we talk about Saudi Arabia specifically, most, if not all the models that we see here in the kingdom are models that are compatible with Sharia. We are an Islamic country and our dealings are based on Sharia, so most of all the models are models that are compatible with Sharia. But for the purpose of the question itself, should we think and what are the companies when they develop their solutions, they have a solution based on Islamic solutions such as Sukuk and other instruments. So we have seen some companies start to innovate of how to establish an infrastructure to achieve solutions that's compatible with Sharia, as a solution named Wathiq that issues Sukuk using DLTs. So this is an innovative solution by providing infrastructure of issuing Sukuk by using Islamic technology, Islamic financial technology. Lending, also another topic. Lending from one entity to another, or the issuance of Sukuk. So I've seen that one of the solutions that we see in Saudi Arabia has seen great strides of innovation as far as the issuance of Sukuk, or the finance of invoices through a Ta'meed platform, and many other solutions in which we can find solutions that are already available, and to apply all the Sharia standards, or maybe to come up with new solutions to face a certain problem. What I understand now that is focusing on the financing sector, that greatly interested in by different entities. Ahmed, today we want to understand more about Awqaf. Can we relate it to the vision of the kingdom? Does Awqaf play a major role in the vision of the kingdom 2030? The General Authority Awqaf is extension of continuous government initiatives and efforts supported by the Ministry of Islamic Affairs, and in 1437 Hijri to the end of 1441 the authority had this full mandate, governance within the different tasks of the authority, the different aspects of the vision of the kingdom, some global initiatives such as the sustainable growth. Truly, they were all incentives, enablers to framework the efforts that is withstanding in the market, and the visions of the Kingdom 2030. Those who see the vision of the Kingdom 2030, they see that the human element is always present, and the fact that the society is rising and we have a thriving community. Those are main pillars of the vision, and those who view the different programs such as the National Transformation Program and the service of the pilgrims, or enhancing the Saudi identity, or the development of the human resources, all senses the needs of the society in general. And maybe if I quote the Crown Prince in Osaka, one of the most important challenges that is not part of the vision of the sustainable growth, but the ambition behind achieving those goals, so that to a great extent helps in achieving such goals. The initiatives will be made available and will have a great impact. Going back to fintech, Nizar, what is the support needed? You expect the the Islamic financial technology. One of the challenges that we faced with is to find a unified framework as far as Sharia. Unfortunately, today, if the product is compatible with Sharia in a certain country, not necessarily that it is compatible with Sharia in another country. So we need a unified framework amongst the different Islamic countries as to say that that certain fintech that is compatible with Sharia in Saudi Arabia, maybe it can work in Emirates and Bahrain and other Islamic countries, the Islamic world in general. So to us, this is one of the main challenges. The fintech must find this unified framework among the Islamic countries. The support must reach all sectors. One of the challenges that we see today in all sectors pertaining to technology to find the appropriate talents to build technical solutions to support all the talents and the skills in this regard. An individual must be aware of the financial aspects, the technology aspects, and specifically in Islamic finance, he must be aware of Sharia or the products compatible with Sharia. The support that we need is raising the awareness. People want to invest; they want to invest in products that is compatible with Sharia. Maybe when an opportunity arises, as far as technical solution, the question always rises: is this compatible with Sharia? So awareness is there, so the awareness must be better. As far those who find those solutions, they must promote and develop solutions that take into consideration the Islamic or the Sharia aspects. What are the tools made available to the Waqf sector as to contribute effectively in economical development? The next phase, such awqaf must be a main contributor of economical development. What are the tools enabling to achieve such goals? As has been stated, my colleague Nizar, technology today is one of the most important tools that are considered effective to save time in many economical activities. The kingdom, praise to Allah, that with the having specialized entities and great movements, we are playing a major role in this regard. In addition to the digital transformation, it is considered one of the most important tools that had helped to achieve better definitions of Waqf in different economical activities. Now there's a platform and many other platforms such as Waqfi, Riga, Ihsan, Tabarrujud. All those platforms had helped the individuals. Those they don't have a large amount of money. Maybe they can even put a 10 riyal of Waqf. This economy scale or the expansion of the consumer base had helped many awqaf to come to rise. The digital transformation was one of the most important instruments that had helped this sector to reach higher level of governance. There's also a new directive, and I believe it's one of the most important directives many rely on. Many entities want to engage in Waqf activities, be it public or private sector, such as the funds or the Waqf funds that has gathered between the two ideas of the investment funds and the Waqf, as the yield or the return of those funds will be directed towards the beneficiaries. Today, many other institutions that only have waqf in the form of real estate, and one of the characteristics of such funds that it take into consideration the governance issues and the investment, lowering the risks, and the ease of establishing such funds and providing the appropriate expertise that are managing such funds.
Over the past 7 years, we have a great work in terms of regulations, and through a lot of new regulations, they give well-balanced space. As you know, waqf or endowment is partly not for commercial purposes, so there should be balance and avoidance of money laundering. So having regulations are very important, and the result of this movement, we have regulations that regulate what the work of endowment. This is one of the main instruments that helped in clarifying the ecosystem and roles in this ecosystem for any operator or a regulator through the value chain, or the beneficiaries using this waqf or endowment. So if anyone has an endowment and waqf who would like to leverage the regulations, you may help him or her. Yes, now we have investor arm that help in operating a lot of businesses in the investment portfolio. We have the National Pioneering Endowment Center. This is one of the knowledge arms. Also, we have other entities working with a lot of family businesses, chambers of commerce, to extend the role of governance that helped in creating a space attracting endowment. Nizar, today artificial intelligence can be seen in fintech. Where do you see applications of AI in Islamic fintech, or how do you sell these products? And can they have a radical solution for Islamic fintech? Well, as you know, AI is in all fields embedded, from the simplest tasks such as agriculture to the most complex and advanced tasks. We are still in the beginning incorporating AI. AI started and can be seen effectively in the credit reporting of clients. We mentioned investment and supporting investment opportunities for individuals and facilities. So if we have a corporate and said, I have 2,000 inputs, so I can analyze the investment opportunity, whether it's risky or not. So here we have AI element, and based on inputs, a report comes out and gives us a classification. The second thing is risks management and abiding by regulations. In the future, compliance with Islamic law will have something relevant to compliance. So we will employ AI to make sure that transactions are in line and compliant with Islamic law. When compared with the rest of the world, we are still in the infancy of AI incorporation, and how to make AI conscious of making decisions. and let alone big data is something that can be leveraged to the advantage of Islamic fintech. Well, Mr. Ahmed, as for awqaf or endowment, can you imagine that this can open opportunities for economy as we have seen in times of crisis? Can endowment play a pivotal role in protection from crises? So do mechanisms develop so they can be protective? Well, the idea of endowment is a precautionary measure that is preemptive. That's why we can see a lot of ideas relevant to endowment. They are they have to do with a different idea. We don't wait for the crisis to happen, so we are proactive. What the kingdom has been through during the pandemic was one of the stress tests for the entire ecosystem, from government measures, procedures, or what was expected from the non-profit sector. If we look back at the measures that have been taken, we can get confidence and belief in what the non-profit sector can do. At that time, there are some tasks that couldn't be done without volunteers, and this is one of the main instruments, which is time at that time. So a lot of civil corporates contributed. There was a fund for limiting the impact of COVID. There was a contribution worth 5 million riyals in addition to health fund. So from the pandemic that emerged, and now it plays several roles for those in need who may need some funds. So always endowment and its instrument is a preemptive measure, but it can be seen at times of crisis, and the pandemic was a good example for what the non-profit sector can do for the ecosystem, whether in the development or using what can be leveraged for needs. Well, Mr. Nizar, since we are today in a financial sector conference, of course there are definitely challenges facing Islamic fintech. What are the major challenges that we may face, in your opinion, in Islamic fintech? Well, thank God that things are improving when it comes to challenges. And what's great about that, all those specialists in this field are aware of it, be it regulators or supporters. We are working hand in hand to overcome such challenges. I talked about talents at the market. This is a challenge. Despite that, FinTech, Saudi Arabia Ministry of Communications, and other entities are working tirelessly to overcome such challenges. When it comes to regulations, we can see Capital Market Authority and SAMA are trying to improve the ecosystem through the adoption of new technologies and by providing a lot of licenses and welcoming innovation ideas in the new environment and ecosystem of the field. And as we can see, there was a strategy for fintech that has been unveiled last week, and that indicates the serious attitude of the kingdom towards fintech and to make the kingdom homeland for fintech. So hand in hand, we will overcome challenges. I think time is running out. In conclusion, today, endowment should receive a lot of attention, special care, as Kingdom of Saudi Arabia. We have Islamic status and leadership, so management of endowment should be more advanced. We have one of the most ancient endowment, which is for Uthman, may Allah be pleased with him. The examples of endowment in the Kingdom of Saudi Arabia should receive more attention, and maybe we may have applications in Islamic finance that can help endowment and how to develop this sector. In Islamic fintech, we have a good model, so we can make the kingdom pioneer in Islamic finance. We have reached the conclusion of our session. I would like to thank you, Mr. Nizar and Ahmed, and I hope that we were able to present something that was of value and benefit to the esteemed guests. Ladies and gentlemen, and for the closing remarks, I would like to invite Mr. Abdulaziz Al-Rashid, Assistant of Minister for International Relations and Head of Supervisory Commission for the Financial Sector Conference.
In the name of Allah, the most gracious, the most merciful, dear colleagues, peace be upon you. At the beginning, I would like to thank you all for participating with us in this conference, attending the sessions of all the sessions of the financial sector conference in the past three sessions, in which we discussed numerous topics, specifically focusing on open banking in the first session. As you have seen, this is a new topic, not only in the financial sector here in Saudi Arabia, but globally. And as you have listened to the different speakers that truly showed the progress in this field, open banking, and the rising opportunities for businesses and individuals in this field, and which we expect that will touch each and every one of us in the near future. And the second and third sessions, we spoke about the Islamic finance, one of the most important pillars of the development of the financial sector in the kingdom, in which it was announced previously the strategy of the kingdom of finance, Islamic finance, through a number of initiatives. Today we spoke on many different axes. As this topic in the kingdom, not as a new topic, many strides of progress that will continue to exist for times and times to come. As we have said, the Islamic finance in the kingdom is at an origin, not a branch of something that's already exists. Sukuk of companies and not the sovereignty sukuk. We've also spoke about kafala, or the guarantee provided in compatibility with Sharia, specifically kafala program. And then we delved into the topic of waqf as a very important tool in Islamic finance and its correlation to financial technology and the Islamic financial technology. And in the conclusion of this session, I but to stand thankful for all the speakers, and also the second edition of the Financial Sector Dialogue. Just a few minutes, it was announced that there was that the Ministry of Finance launched the first award of Islamic Finance. Of course, this award is part of the Islamic financial strategy as part of the development of the financial sector. More details will be provided about this award, so ask all the reporters, all that are interested. This announcement that was made in a press conference by the Minister of Finance, and we are hoping very soon that another press conference will be held with the presence of the central bank governor and all the experts to provide more details about the award and to answer all your questions. It's also expected that the awards will be given according to the different paths of this award. In March of the first quarter of March in 2023. In conclusion, I ask you to follow up on the social media platforms to follow up on all that is new and recent and what do we expect in the near future, specifically in the fourth quarter, and in which we will hold the third edition of the Financial Sector Dialogues. And thank you for your interaction. Thank you.
ضيوفنا الكرام بهذا
Dear guests, with this we come to the conclusion of the dialogues of the financial sector. We thank you for your effective participation, and we're looking forward to see you again in future events, and peace be upon you.